Hey everyone, Mark here at TapeTally.com for your Week 26 recap, halfway through the year for 2012. This week we saw the markets move up about 2% on the back of the large move from Thursday afternoon when the EU came to some sort of agreement on how they're going to deal with their issues there. So that started at about 2:30 Eastern on Thursday, and it carried through in the large gap that we saw on Friday. So a lot of people probably didn't participate in that because we saw that huge gap and it basically just gapped and crapped on Friday there. It didn't move too much. However, the encouraging sign that we saw was towards the end of the day, the markets did move up. So they started strong and they finished strong, which is probably an indication that we're going to see even more upside here. Although, given recent market conditions, I'm not 100% convinced that that's going to happen. So I'm maintaining my ratings here. I received a question actually saying when I would change this, and since the market goes up, why are we not changing this to bullish? And it's kind of a short-term myopic view. I wrote about this earlier about how traders can be quite short-sighted when it comes to looking at the overall pictures here. So let's take a look at the SPY here on a weekly basis. We'll kind of do the same thing that we did last week, where we looked at three different time frames for the SPY. This gives us a good indication of where we're at and where I think we're most probable to go. So as you can see, this last candle here, I'll just blow this up a bit. We did have quite a move, and that's once we drill down to the daily and the intraday frames, you'll see that that was basically just 1.5 days of moves. Okay, so we'll take a look at this. I drew this yellow line here. This may be a new channel forming here, a little bit less of an inclined slope. So we could have a downward move here eventually as the channel becomes less sloped. So right now, I would say that with the blue line channel here, we're stuck in the middle. For the yellow line channel, we are probably entering an area where there's quite a bit of overhead resistance, and we would expect to see some selling probably up here in the, what is that, probably in the 145 range if we get up there. Last week I talked about us getting in the 135 range, and we actually blasted through that at the close on Friday. So I mean, this is still a market. Let's just move on to the daily time frame here. Okay, too big. Okay, so this is still a market, filled with mixed messages. I mean, no matter what. Sorry, let's just break this down. Let's just go right to the intraday frame. We'll talk about that one. Intraday frame, 15 days back. All right. So if we back it up a bit, this is where we were on last Friday. This is where we were. We talked about this kind of late day breakout here, with the possibility of having a bounce here. And what happened actually on the Monday is we got a large gap down and a move which a lot of traders were looking at this because it was breaking this low right here. It was breaking this low and it held, and then it jumped above it, filled this gap down lower. This was a signal to a lot of traders that once we broke this this trend line here, this kind of low volume pull up and filled this gap, a lot of traders were going short here. However, on this news towards like I was talking about before, on late Thursday, this market just skyrocketed and probably caught a lot of people off guard. Probably a lot of shorts did not. They probably had their stops up here somewhere, here, or possibly here at the previous highs. They could be up here, anywhere. So basically what happens is that if a lot of traders get onto one side, which it seems like they did here, they add fuel to the fire here. So once this was broken, a lot of shorts were covering here, and towards the end of the day, I would assume that a lot more shorts were covering when it took out this high here. So at the end of the day, though, I don't think that we move too much higher too fast, especially next week, given that it's a holiday week with the July 4th festivities happening on the Wednesday and the half-day market uh, on Tuesday. I'd say this market is still quite volatile. You know, we go back to the daily here. I mean, it's still stuck in this range. If we draw these lines here, there's I know it's easy to jump on the bandwagon, especially if you have a bias to the long side. You know, it's easy to jump on that wagon and say, okay, you know, we're we're okay here, we're out of the clear. But there's a lot of resistance here. There's a lot of people that bought here, you know, on this nice trending market, and they're waiting to get back to even to sell. So there's going to be a lot of resistance here. I think it's highly unlikely that we just continue shooting straight up here. Um, I think what would frustrate a lot of people is if we did actually continue to go up here, but you know, having 2 or 3 or 4 days going straight up, I highly doubt that that's going to happen. I think there might be 4 or 5 days where we do get some moves up here into this resistance, then we get a low volume sell off, and then it's kind of back into the range, and we see what happens. We trade the market that we have. So I think the next couple of weeks is, you know, it should kind of show where the market will be heading to finish the summer. But you know, it's my feeling that I think we're going to remain volatile and in a range for now until proven otherwise. So have a great week and trade well.